Am I glad I got out of that trade on PayPal? I would have been underwater right now. So I did trade this morning. We're up over $600, which I'll take because I took a pretty substantial loss, nearly $2,000. I was down $2,300 at one point on Monday. Came back yesterday. Well, I got that back up on Monday. We were only down about 1,900. Came back yesterday up 1,500. Now we're up 600. So we're positive on the week. So a little rough start to the week. It's been a while since I had a week that was that crazy, but it just goes to show you how dangerous this game really is. So, there's a few things that really stand out to me today. Obviously, Jerome Powell's speech at, I think it's 1:30. There's still talk of this pivot, not just from the media, but from some banks. I don't see it happening. I really don't. If you look at the ECB, look at the European Central Bank, there's clues over there, as to what they're saying. There's clues for us here in the U.S. across the pond as to how high the interest rate hike might be in December, how long they're going to extend interest rate hikes, when they might actually pivot. So I follow, what Christine Lagarde says. She's the president of the European Central Bank. And she says explicitly that the ECB is not done raising interest rates. So this is coming from the central bank themselves in Europe. If there was a pivot, you would think they would give us some sort of clue to this, but they're not. She warned that the European Central Bank is not done raising interest rates, saying inflation still has a way to go. And that's the other thing too. We got this inflation number from the EU today, and it came in at 10%. So it's down from October's height of 10.6%. But that doesn't mean inflation is down. It's actually still up, right? It's still up 10%. It's just the rate has come down a little bit. And again, with these, it's like a stock chart, right? You see a huge rally in a stock price. Well, the rally is going to end eventually. It's going to have to pull back. Now, whether it contracts 25%, 50%, or 100% from the bottom of the rally, that's going to depend on asset to asset and economic financial conditions. But when you think about interest rates or inflation, think about inflation the same way, right? The inflation spikes, then it kind of decelerates a little bit, might even fall for a couple of months. But is that just the pullback? Is the inflation rate going to retract 50%, 100% anytime soon? I highly doubt it. You have Morgan Stanley calling for, I think it was like a 3.3% inflation rate by the end of 2023. Who knows where they're actually getting a lot of these predictions and numbers from. But, you have hopes that inflation is going to slow sometime soon. But Financial Times says the ECB president struck a bearish tone. I would like to see inflation as having peaked in October, she said, but I'm afraid that I would not go as far as that. So even though the inflation number came down a little bit for the month of November for the ECB's inflation rate, right? It went from 2.6 in October 10.6 in October. Now it's down to 10. Even so, you have the central bank, the head of the central bank in Europe saying that inflation has not yet peaked, which is probably true. It's probably true. You take into consideration everything that's going on, the wars, the lockdowns in China, which I think that's more monetary than anything. I really don't think the Chinese officials or the central planners in China, I don't believe they truly think there's a scientific reason to keep their people in lockdowns for 4+ years. It's got to be a monetary thing. It's some sort of monetary or manufacturing based thing. Maybe they're trying to bring down their own inflation. Maybe they're trying to hurt the U.S. economy. I mean, Lord only knows, but there's something else to this whole situation in China. They talk about the soaring energy prices and the food prices due to Russia's invasion, right? No talk about the economy coming to a complete halt in 2020. No mention of that, of course. So yeah, I think the inflation number was actually better too than expected. But this is why we got to pay attention to inflation data from not just the EU, but from China, from the UK, from some of these other currencies. You see also a Goldman Sachs when it comes to oil saying that there's a high probability of an OPEC cut and expects oil prices to hit 110 next year. And Biden's over here talking, constantly trying to get OPEC and Saudi Arabia to pump up, oil production when we could pump it up ourselves here in the U.S., but they won't do it. They won't do it. This is part of the cosmopolitans' ideology, is that they want us interlocked, interdependent. Now, you've seen since COVID, we've kind of gone from this super globalized economy to countries having to retreat to more regional, trading partners. Is that a trend we're going to continue to see? But yeah, I think the cosmopolitans, they want us to be interlocked, interdependent on each other. And they don't want nations really being reliant only on themselves. This was a wild headline from Morgan Stanley again. Morgan Stanley's Mike Wilson predicts double-digit percentage drop will hit stocks in early 2023. So there is some bearish sentiment out there. As much as there's kind of the bullish sentiment that the Fed's going to pivot, that the interest rates will come down, that there's going to be a 50 basis point interest rate hike in December, that inflation is peaked. Even though there's all of this and all that stuff, if it were true, would be bullish for the stock market. There's still plenty of banks and institutions that are at least putting out a bearish message for the market. Like I said, we've got the Powell speech later on today that should give us some clues. You really got to read in between the lines with these Fed ghouls. Couple other things. Yeah, the job market I wanted to hit real quick. U.S. job openings, I believe, both in private and public companies, because we got several different employment information numbers. They're coming down, right? Employment, not unemployment. Employment is starting to slow down. The companies are not hiring as fast. There's not as many jobs available. They're just not hiring as much. Why? Because of the interest rates, the cost of borrowing. You've seen the layoffs in the tech industry. I don't think it's going to stop just at the tech industry, because the Fed has said this, that their goal is about 5% unemployment. I think, within the next year or so. That's their goal, right? By raising the interest rates, restricting the monetary supply, reducing demand. Well, how do you reduce demand? You got to raise unemployment too. So be aware of that. The Fed wants higher unemployment. It's no wonder that we see the job growth numbers starting to slow down. But at the same time, they revised the U.S. GDP for Q3. They revised it from 206 up to 2.9, right? Annualized 2.9% on quarter in Q3. So again, a lot of conflicting information. Some of the numbers make it look like everything might be okay. Other numbers make it look like we're going to hell in a handbasket. U.S. mortgage applications fall last week. So a lot going on. But the most important thing, I think, is the interest rate hike coming up. Inflation numbers, right? Has inflation peaked? Because you got to think about all this to figure out how you want to position if you're going to trade these markets. And then there is the whole idea of the Fed wanting to raise unemployment to 5%. Oh, and also their 2% average target. Don't forget that. It's not a 2% target inflation rate. It's a 2% average. And it's very arbitrary because they don't exactly tell us. They're not open with us as to, well, how many years back are they going to try to achieve this 2% average? Are they looking 5, 10, 15, 25 years into the future? We really don't know. But my hunch is that the central planners, they're not thinking about just years or decades. They're thinking hundreds of years into the future. So with that, I will leave it there. Follow me on Instagram @MillennialTrades. And as always, until next time, I'll see you on the next video.